Outstanding Tuesday, April 1st, 320. Let's find Tuesday afternoon. Talk quick about the markets and names I'm looking at. Go from there. S&P has been bouncing around, started in the red, bounced into the green by, let's see when we start to dip. I don't have my stuff up here. Hit highs around the noon hour, all the way up to right to 563 on the SPY, and then kind of like a melt ever since. You had the press secretary, she was on, so I don't know if that has something to do with it. Pretty much reaffirming that the tariff announcement will be at 4 o'clock. That pretty much odds are that none of these tariffs can be rolled back. But POTUS is open to conversation. But I mean, the stuff isn't out of left field. I keep thinking there might be some kind of surprise element that we have a bounce or a squeeze, but I keep my bias to both sides. So possibility we can set ways into a bear market, right? Uh, Especially if that bear flag breaks 540 on the SPY, that would be the big spot. On the flip side, maybe things aren't as bad as it's being spun out there. There's a lot of uncertainty. Some of that will, I mean, when you have some things, when you have change causes uncertainty. No one knows for 100% sure what the possible outcomes of tariffs and how this all resolves. So, actually, to see the market not going crazy, I think that bodes well until tomorrow. But time will tell. So for me, I keep looking at those spots. 563 on the SPY would get similar. It's almost like we're at the same spot we were when I was on the rant yesterday afternoon. Would love to see that a rally into the close. 563 would be phenomenal close. And then under that, you gotta, so we have the lows from yesterday, 546 and change, and then 540. Those would be some key spots. And that bear flag, if you take a look at that trend line, I think I posted here, we were back above it into the close yesterday, and here we are back below it. So that's not as a big a deal. Typically, when that breaks, then we do have the downside. But tomorrow, obviously, there'll be a catalyst, right? So, talking about it, is it going to be similar to a Fed meeting? I mean, there's going to be definitely some fireworks, and I didn't even check what the implied move is on the markets right now. So the S&P, $12.02, right? So, if you take a look at the implied move, 12. I got to do my trusty math here. Still a 2.1% implied move on the S&P, and I think coming into this week was 2.5%. So still a large move implied, and we only have 3.5 days left. Well, 3 days and 33 minutes left in the trading week. Just some other things of note, and I keep looking at this GDP now from Atlanta Fed, right? So they do a lot of different data points to get this number. So it was bounced around. The first time was negative at the end of February, negative 2.8. Then it got ratchet back up 1.8%. Then was sitting there 1.8, then down to 2.1. And then this latest read that just came out late this morning, well, right after the noon hour, has it at a minus 3.8% GDP for quarter one, which we won't find out till mid-April. I mean, certainly not the kind of number you want to see. Who knows? I don't even know how well this is back tested in regards to its impact of how accurate it is on actually predicting the GDP number for Q1. We're gonna find out, but you probably don't want to see that in that direction. And even if it is minus 3.7%, is this going to be a 1 quarter off thing, or is it going to be multiple quarters? And then obviously that recession prediction, that folks have been talking about, that probably comes to fruition. Also, you see lots of these headlines too, and these, it's like both ways, and a lot of these, again, but a lot's biased, right? So if you're a big supporter of the current administration, yeah, you don't support some of these things. If you aren't, it's like, I get people tell me that they think the current administration wants the market to tank and crash and get into a recession. I'm not going to argue that, right? But I'm partial both ways. So here's one chart, and this is, I see this a lot now, that the tariffs have caused, back in the 20s, caused a big Great Recession, right? I mean, how many years do you do this long enough? Do you see all these overlays of charts? The dot-com bubble. I mean, every time we have an inkling of a pullback, those charts, people start overlaying those charts. Oh my gosh, here we're in the dot-com. Look at these valuations, and this is 2010, 11, 12, 15, 18, 19, you name it. It always comes out, especially, and usually they don't come out when markets are soaring and rallying over a couple day period. They usually come out either right when the markets hit highs, or right when it looks like we're on the cusp of a huge breakdown, right? So certainly an interesting chart. Uh, I mean, that's max potential. I mean, they have 35%. You can put whatever you want on the chart again. I mean, obviously, everybody, it's out there, right? And then there's the other side, and this is the amount of tariffs that the other countries charge on the U.S., right? So it's definitely not 25%, but there are some uh, scenarios that are not beneficial for the U.S. So even if just things snap back to where we're all even, Steven, I guess that'd be a good thing. But obviously, doing it in this kind of herky jerky manner where it just causes uncertainty. There's a limited time for people to react. We don't know the ramifications. Anyone, again, within who can 100% guarantee that they know that the actual outcome of all this, I mean, of course they're going to say it. If they agree with the policies, they're going to say, yeah, it's great. If people disagree with the policies, say it's horrible. I don't think anybody can 100% guarantee that the GDP is going to soar for this year or tank in this year. We don't know, right? So until we get more certainty, I think this chop continues. And today looked like maybe we're going to break out, which would have been a good thing, right? I would love to see the market continue, break over 563, but we hit that, bounced quick $4 reversal in a half hour, then a $2 reversal up in 15 minutes. And it's just been bouncing ever since. So really, for me, how I trade, it's not the best environment unless you're quick, right? You want to get some scalps. Typically, when you do the scalps, you're going to do closer or in the money options. That again, that's not my trading style. So for me, I just keep looking for individual names where I think might have some bounces or pullbacks. Get some inexpensive calls or puts to take advantage of that move. Sell them, lock profits in, and then if there's continuation, great. The small will turn into large. If not, I've locked profits in, and if they don't work out, they don't work out. That's kind of how I'm playing. All right. So that's individual names. And as I'm talking, Newsmax is hitting 250, $10 2 days ago. All right. Shopify. So I had this as one of my bounce plays starting Monday. Yeah, fun. Got those calls at the bottom. Well, not right at the bottom. It was 88, 89.20. It hit 90, and then I started getting the calls. Locked them in yesterday for 100%, and then it did continuation. At one point, it was up 12% from its lows yesterday. Uh, Lock more of my calls in. In hindsight, I was thinking to lock all of them in, but so got some more out nearly for 400%, and then I just held the rest because I think if there is any kind of bounce, I could see shop going 105, 106, 107. If that's the case, my calls are gonna be 1,000, 1,500, 2,000%. So, and consider I don't have a lot of positions on. That's instead of in lieu of having 4 positions on and having a lot of risk, I don't have a lot of risk on. So that's kind of thought process there. But look at today, of course, 99.54 it hit. Looked like it was gonna break 100, and then we had the reversal here in the afternoon. I'll still hold on to the calls. If you had told me it was gonna hit 99.54 by Thursday, I would have been happy because by then I thought the calls would be green anyway. So that's kind of the thought process there with Shopify. And then I went and got some Caterpillar calls. Uh, Similarly, I'm looking the risk reward. I looked at the strikes 347.50, maybe the 350s. But if uh, if we have a bounce tomorrow, or even on Thursday, or even if just some names, just in some industrial names rally, and the tech sector still has pressure, what have you, if Caterpillar goes up 3 or 4 or 5% in the next 2 days, the call's gonna be up substantial. So that was kind of the thought process there. Not only that, you look at the chart I put on the watch list this morning. It's hit lows back at the start of March and April, and then back in the summer. So I think it offers a nice, attractive bounce point. And then if it does get some momentum, I think it's gonna be a large outsized move. It's not gonna be one of those moves that's just up a percent over a couple of days. And I've talked about this in the past on my rants. You see it in March. You can see it at the start of the year. You can see it back at the end of November, December when cat goes on a move to the upside. Well, even downside too. It's multi-day. So that's kind of the thought process there. So I'll continue to hold those. Um, BIDU just had a spike before up to 91.60, still holding those strikes. Again, today flat pretty much. Couldn't, even when we bounced, it was slightly green. It's trading in a tight range, so probably gonna need some more green on the China markets, Asia markets overnight, and maybe that'll help. And once it gets a gap and go, I think that's off to the races. Still watching DELL here, pretty much flat today. I didn't even look at the last trade. It was when I put this chart, it was up. Yeah, it's up 0.3%. So Dell's just killing premiums today. It got up to 92.80, but it's back here at 91.50, not doing much. Maybe it needs a kick in the butt. So I'll continue to be patient, adding some strikes on that one. Also watching Wayfair. So Wayfair, I was looking for another name to possibly play for a bounce this morning, and Wayfair came up on my, I was looking at the options, all of a sudden, boom, someone, I think it was the 35 strikes. It might have been the weeklies. I have to go back and look. It was like 5,000 straight up contracts, no spread, no nothing. Yeah, it was the 35. Oh no, was it the 40s? What am I looking at? Was it next week's? Maybe it was next week's. I'm trying to find the volume here. Why don't I see it? Was it April 17th? Yeah, there it is. April 17th, $36 calls. The open interest was 5,000. Volume was 5,000. So maybe it was someone closing. It was somewhat out the bid, but it didn't say spread when it went through. So I almost added some of those strikes. I passed another name. If we find footing tomorrow, the good thing with the tariff news is going to be after the close. So I don't know if that's a good or bad thing, but at least we won't get some crazy swings at 3 o'clock, because even if the market does go lower, it might jive around, right? So we might have some chop, and you either, if you have puts and it goes down, you might get scared out of the puts because the market might bounce first, or vice versa. So I think it's a good thing that it's after hours, but definitely a name I'll be watching, continue to watch. And then I was talking about some hedges, right? And when I say I put hedges, but you can still get calls because some of these 3-time bear ETFs might be a nice trade there. And SQQQ, it's probably the one I'm going to look at. You look, yesterday it was all the way up near 41. I almost got some at 9:45 yesterday. Thankfully passed there. But you pull that back and you go back and, I talked about the erosion, right? So when you have these 2 and 3-time bear, bull and bear ETFs, there's rebalancings every night, and a function of that, it just erodes the stock over time. So let's say for 2 years the market stays completely 100% flat, these ETFs will just go down regardless. Slow, like a slow leak in a tire, right? So definitely not vehicles to trade over any long duration. But I was talking about this a couple days ago. If the poop really hits the fan, these are some of the names that you see go parabolic. And when I say parabolic, and you can see the erosion. So some of this obviously is because the market has rallied, but the other part is the erosion side. But if we have let's say a 3-week period of some crazy selling, which you can't rule out in this current environment, I give that maybe a 3% probability. But if it does happen, you need to know some of the trades that might work. And this is one of those where you instead of trying to do individual names that might have catalysts or what have you, you can get an ETF. So the SQQs, I mean, it's sitting here. It was 41 yesterday when we were at lows. What is it right now? It was just flat earlier. It's 37.92. So it's red, down 1% here. But if things go parabolic, and let's say the NASDAQ drops another 20% from here, SQQQ can be 90, 100, $110 in a flash. So if not higher. Not saying that will happen, but those are some scenarios that, I mean, things could get crazy. Who knows, right? No one, like I said before, no one knows for certain. We can also rally, right? So that's it, folks. Let's have a great day. Get 26 minutes to the close. I don't think I'll be adding anything into tomorrow, but tomorrow definitely at the open. We'll see if we get another one of those shake and bake scenarios. So we get the move down, then the bounce, probably some more chop, unless there's some clarity. Who knows if some rumors start leaking out about the possibility of rumors, like this morning, the Washington Post article saying, what, 20% across the board? I don't know. They also, cited an economist who said 7% unemployment rate. I mean, I don't know if they're just pulling these numbers out of a hat. Back in COVID, I think the high was 14%, but that was like induced, right? It's pretty much you can't have your business open, your employees have to not have a job or take on that. So they all took unemployment. And so that was less about the actual job market than just being forced, right? So to say it's going to be 7%, I mean, anyway, we'll see. Let's have a great day, folks. I'll be back. Rock and roll.